What is up, YouTube? Welcome back to the Numbers, coming to you with another earnings update here on one of our other stocks that we've been watching. Name of the company, Fubo TV, ticker symbol FUBO, listed here on the New York Stock Exchange. Stock is down roughly 18 cents a share right now to $1.37, down a little over 11.5% on the day. A lot of people wondering what's going on, so let's get into the numbers here. We were gaining some momentum coming into these earnings, basically got almost back to that 20-day moving average. Stock came out beating on the top and bottom lines, as they've been doing for the last several quarters in a row now, posting EPS loss of 19 cents a share off estimates of a touch below 22 cents a share, beating by almost 13%. And on the revenue side, posting over that 400 million milestone mark again, 402.347 million on estimates of 381.271 million, beating by about 5.5%. And in my opinion, I was fairly confident with these numbers going into these earnings, but we had an upward reaction and now we have a downward reaction. So as you see, we immediately spiked up, got to basically slightly above that top trend line here of this long-term wedge that we appear to be in. And we also basically hit that fib level as well. As you see on the 1 year, you can see top fib $1.69. That is exactly where the stock went and then began to reject and start pulling back, now currently down again about 11%. But we can see, going back the last couple of quarters, the stock has been very nice, beating earnings. And also, I said, in my opinion, if you remember, they brought them down here because of supposed slightly lower fiscal year guidance for this year. And also there was that lawsuit that everyone's apparently waiting for. And I mentioned how I feel about the lawsuit. I think Fubo has a good case, in my opinion, and I think there is actually a good chance that they may actually win. But also, I mentioned that even after they dropped them down on the supposed slightly light fiscal year revenue number, I said that, in my opinion, you watch and you give them a quarter or two. Excuse me, and if they're able to come in above these expectations, you watch, they're going to reinstate that older guidance or potentially even pump it up. And now we're going to be talking about a completely different story. And that is basically what they did. So if we pull up some of these numbers here, you can see, okay, very nice loss, revenue up. For North America, Fubo expects revenue $357.5 million to $367.5 million for Q2, and $1.525 billion to $1.545 billion for 2024, compared with $1.505 billion to $1.525 billion previously. Right? So now our new range for 2024 for North America, our low end of the range is now the high end of the previous forecast. This is what I mean. This is literally why I say give it a quarter or two and watch that these numbers are going to change and they're going to go back to what they previously anticipated. And, everyone's going to feel like they may have counted them out earlier than they should have. Fubo TV gaining popularity in North America. Growth in paid subscribers. Okay, sales grew 24% year over year. EPS beat estimates. Gross margin stood at 7%, up by about a little less than 600 basis points year over year. North America streaming revenue, again, this is their bread and butter. Revenue grew 24% year over year to $394 million, as paid subscribers grew 18% year over year to over 1.5 million. But yet, of course, we try to find any negative we can to bring the stock down. And I appreciate the fact, again, it's still a small cap, it pops, it drops, it has these swings, but overall, in my opinion, this seems like a pretty decent quarter for Fubo. And chances are everyone's just waiting for the outcome of this lawsuit. So I guess we'll see what happens. But again, I have to remind everyone that, before these supposed lower fiscal year outlook numbers for 24 came out, and before this whole lawsuit against this joint venture, against these three powerhouses really in the space, before that happened, The stock went from the low ones to almost $4 a share on its own merits based off recent momentum, recent earnings beat, recent subscriber growth, revenue growth, right? From low ones to 387, this stock went on its own merits. So the fact that people are like, oh, this thing's a piece of crap, it deserves to be down here, I'm sorry. In my opinion, I have to disagree. Average revenue per user rose 10% year over year to over 84.5. The rest of the world revenue was 8.4 million, 7% year over year jump. Paid subscriber growth of 5% year over year to almost 400,000. Average revenue per user grew by 7% year over year. Fubo held 175 million in cash. Quote, Fubo's first quarter 24 performance builds upon the strong momentum achieved in the prior year with double-digit paid subscribers, total revenue, and ad revenue growth in North America. Company remains confident in antitrust lawsuits. Again, Disney, Fox, and Warner Brothers all teaming up in a joint venture to essentially get into the sports streaming market, which of course is Fubo's market. Ongoing investigation by the Department of Justice and congressional inquiries are also encouraging signs. So this is what I mean. Everyone's trying to keep them down for this supposed lawsuit. I don't know. Excuse me. I really have to lean towards their favor in regards to this lawsuit. But again, that's just me. I know some people may comment and say, nah, I think it's going to get squashed, and I don't think they have a case. All right, fine. Obviously, we're all entitled to our own opinion, and we're not going to know the outcome until the outcome is released, right? But as you see here, Fubo TV expects second quarter revenue now of $365.5 million to $376.5 million versus consensus of $355.23. So we are now forecasting 10 to 20 million more than this average estimate here for next quarter. Fiscal 24 revenue in total of $1.558 billion to $1.58 billion. Prior 1,536 to 156 billion. So now our low end of the range is at prior high end of the range, and consensus is 1.56 billion as well, which is basically the low end of the range. And again, this is why I literally said, give them a quarter or two. If they're able to maintain that 400 million plus mark and come in above expectations, then outlooks will be raised, guidance will be increased, and everything will go back to, the same kind of growth potential that we saw 1 to 2 quarters ago, before Wall Street kind of started to beat them up a little bit. Stock gained 34% in the last 12 months. Bada bing, bada boom. But overall, in my opinion, it seems like pretty good growth. And again, they can try to beat it up here. Like I said, paid subscribers here in the U.S., 1.511 million versus 1.618 million, estimated by 2 analysts on average. If paid subscribers are growing at such a nice percentage rate year over year, how can these 2 analysts have estimates this high? So, it's certain estimates like this that kind of throw me for a loop when I know I spoke about like Coinbase with my personal feelings of them kind of like lowballing and lobbing these kind of lower estimates on the revenue side for the company, and they're able to come in above these estimates, and all of a sudden the stock starts climbing. And it amazes me that, certain sectors and certain stocks will always somehow report like in line or better than expected when it comes to their subs or their daily active users. And then you have a situation like this with Fubo, in my opinion, growing very nicely year over year with its subs, with its revenue, but somehow, about 100,000 less than what analysts were expecting on the sub side. It just throws me for a loop sometimes. You see other companies like Robinhood, Coinbase, right? Miraculously, their active users and their subscribers are always somehow in line or above what analysts are expecting, but we were expecting such a big chunk here in something like Fubo. We recently saw the same thing with something like Snap, right? Snap, everyone was kind of mixed. A lot of people were anticipating a weak quarter. They forecasted themselves a weak quarter, but then miraculously everything's fine and everything's better than expected, and the stock jumped 30%. And of course, the daily active users were above what analysts expected, right? So it's just amazing how all of these other companies are able to come in above these expectations, but somehow Fubo's 100,000 subs short, even though they are growing nicely, in my opinion, year over year. So, like I said, they want to beat it up in the time frame, fine, no problem. Even when I first looked at it, and I thought it was undervalued at around $1, it continued to go down when I thought it would go up. And then what happened? The stock, obviously started to explode and ran up to almost $4. So, sometimes it could be hard to time, but overall, in my opinion, I'm personally seeing growth here. I don't know about the rest of you. Obviously, let me know how you feel down in the comment section. Revenue, advertising revenue. This is what I mean. Something like this, I can understand if it's viewed as a negative. But again, it's a very slight negative technically. Bringing in, just a touch shy of 27.5 million versus about 27.9 million estimated by 5 analysts on average. Compared to the year ago, this number represents almost a 21% change. So you see what I mean? A lot of these numbers, 20, 24, this segment here of just the other revenue coming in represents a year-over-year change of almost 50%. So, that's what throws me for a loop sometimes, depending on the situation and just depending on how the analysts feel and what they expect that the company should be bringing in. I mean, we all know it's out of our control, but I just laugh that, you're seeing some of these numbers here up 20+% year over year, but apparently it's viewed as, quote, not good enough. But like I said, growth is growth. Growth is growth, in my opinion. Revenue from subscriptions, 373.71 million versus the 5 analyst average estimate of 353.42 million, year-over-year change of 24.2%. And that's what I mean. It's like all of this gets swept under the rug, and we just kind of try to lump them all into this overall view of quote-unquote underwhelming. And in my opinion, I still say again, people might try to look for the perfect price and say, no, it's pulling back to 125, 120, I'll buy it there. Okay, fine, I can appreciate that. But, here at 137, you may call me crazy, but in my opinion, I like it. I like it. Again, the stock went from $1 to almost $4 on its own merits. Before all of this drama started hitting the tape, the stock went from 1 to almost 4 on its own merits, on its own growth, on the fact that it started to narrow the losses, was consistently increasing its revenue, its business, its subs, coming in consistently above analyst expectations on both the top and bottom line. Stock went from $1 to almost $4 on its own merits. But now it's worth low $1, and it's not worth watching. It's not worth owning all of a sudden, right? I don't think so. I honestly, in my opinion, have to completely disagree with this move that we're seeing here. I think the stock should have went up to the top of the range like it did to that fib and actually kind of hung out up there. And over the next day or two, if you want to now reject it off the top trend line and start to bring it down, it would be more understandable. But the fact that they did it instantaneously at the open to pop it up and then reject it and have it pull back now down over 11.5%, in my opinion, I do think it's an overreaction. But, even when it was up in the 3s and coming down into the 2s, I said, in my opinion, I personally like it. So now at 137, you guys know how I feel. But overall, yeah, Fubo was up out of the gate. Strong Q2 forecast. Upbeat results here for Q1. We were at a 3-week high at 168 if gains hold. And again, revenue range now. Low end of the range is now well above the average estimate. lost only 11 cents per share, right? Supposedly this was the reason why the huge sell-off before the bottoming and the U-turn recovery took place. This was the reasoning, was because they were posting wider than expected losses. Now they're posting a loss of 11 cents on estimates of 21, but again, still not good enough, and supposedly there are negatives looming. And something like this. Still, company has not posted positive operating cash flows since September 2020. And that's what I mean. You know, sometimes we look at a negative like this, and on one stock it deserves to be down, and on another stock it's not a big deal, and we pump the stock up anyway. And again, another funny example I used to always bring up is a company like DraftKings. Right? Before they really started having revenue chunk in over the last couple of quarters, I made the argument that the stock was overvalued and it shouldn't move that much. And I just kind of wanted to remind everyone that that is a company that runs a gambling website that apparently is not profitable. Okay? Wrap your head around that one. But that stock has been growing and it has been on the up and up. And again, I understand they're not in the exact same space. But that's why to mention something like this, oh, it hasn't posted positive operating cash flow since September 2020. First of all, in my mind, who really cares? Especially since they've been growing nicely. Average revenue per user is up. Losses are more narrow. Revenue forecast is now higher than expectations when everyone thought it was going to be a slower year for Fubo. Right? But that's the little negative you want to slip in at the end to potentially make the argument that the stock should be lower. Looking at the cash flow. Okay, let's look at the cash flow. This time last year, debt 442.8 was consistently increasing quarter over quarter. Now, as of last quarter, we're back down to 443 from above 448. The cash is slowly trickling down. But look at the free cash flow, right? Oh, it hasn't been positive since 2020. Guess what? It's almost flat now, right? So this is what I mean. You can't really loom and hold these negatives like, you know, just hold them over these stocks when the companies, in my opinion, are actually doing the right thing and are growing nicely. So, okay, I guess you're correct technically. Free cash flow minus 2.76 million. Wow. But of course, we just upped guidance next quarter by, 10 to 20 million extra than what analysts were expecting. So for all you know, next quarter, we might go free cash flow positive. So why even bring that up, in my eyes? But I understand. Again, I'm not trying to play favorites. We call it like we see it. And technically the cash is dropping. And it technically is negative free cash flow. Look at the quarter before, though. Minus 26.25 million. Before that, minus 71.25 million. Minus 78.25 million. This time last year, minus 22.25 million. Now we're at minus 2 million. And you expect me to believe that is one of the main negatives that is keeping the stock down? In my opinion, I disagree. I mean, obviously, again, it's factual. They do technically have negative cash flow. But in my opinion, I really do think people are not seeing the big picture. I think their service is growing nicely. They have decent subscription growth. They have nice revenue growth. Again, they're narrowing these losses. In my opinion, it's only a matter of time before they break through to net income positivity. It took 3 media conglomerates to team up to come into their space because they're seeing the growth in the sector. You understand? That is my take on it. And yes, if something like Disney decided to start up a new company, a new division to take on Fubo, understandable. The fact that 3 of them have now come together to come into this space that is growing like a weed, where Fubo is one of the front runners, yeah, in my opinion, I have to say, I lean towards Fubo when it comes to this lawsuit. I think they have a much stronger case than people might think. And listen, if you really want to keep the stock down and flat until like August, when we supposedly get this announcement of the outcome, again, it's out of our control. But in my opinion, even the average investor, when we were seeing these earnings beats and the subscribers and revenue climbing and the stock climbing up into the 2s and into the 3s, everyone basically agreed for the most part. Everyone basically agreed that they're doing good things. They've turned the losses around drastically. And now we're from the 300 million to the 400 million mark. And again, supposedly those quote-unquote light 2024 fiscal year revenue numbers are now back in line, as I predicted this time 3 months ago. So that's why, again, we may have to deal with short-term volatility before we deal with long-term growth. And if we extend this out a little bit, let me see some. If we extend these out, you can see that now we are at the tightening, approaching the apex, right at early August potentially, with earnings coming out. Of course, we could potentially pop out of this wedge before earnings on the momentum. But you can see we are very close to the apex right there, beginning of August, with not only next earnings coming out, but supposedly the, hearing the potential outcome of this lawsuit. So that's what I mean. It could potentially line up to be a perfect situation where we're dealing with the stock that was beaten up, even though they're growing well in my eyes. So we may potentially rally off of momentum that we're just undervalued and beat them up too much. Also, in my eyes, they have a very good chance to post a more narrow loss and beat those revenue expectations. They already just upped the guidance for next quarter. So that's a second reasoning to potentially pop out of the wedge. And then third, again, if they actually get the ruling in their favor, that will be the third catalyst to potentially pop it out of the wedge and gain it momentum. So we may beat it up and bring it back down here to $1 mid-July. And then we potentially start to climb up above $1 going into these earnings. And then they beat earnings and we see that it was an overreaction. Boom, the stock pops back up. Then they potentially get the ruling in their favor. Boom, all of a sudden the stock's back at $2.50, $3. And all of this was for nothing. So, in my eyes, of course, I'm being optimistic. But, again, different situation when we're talking about Fubo in comparison to another stock we just looked at, like a STEM, right? STEM, more of kind of trying to time the bottom, trying to give the company the benefit of the doubt, and just kind of hoping that that next quarter is going to be a great quarter and their turnaround quarter. The difference is Fubo already went through that phase and is turning it around and is growing their business nicely. And again, had 3 competitors team up to take them on. So, drastically different situation. But, in my opinion, I still have to say, I think Fubo is undervalued. I really do think Fubo is undervalued. And, again, this whole time it was running into the 2s and into the 3s. I had a bunch of people comment, oh man, I saw you talk about it, but I wasn't sure, and I could have bought this at $1.20, now it's up here at $3.20, oh man, that sucks. And that's what I mean. That's what I mean. This is why I like to look at a lot of the fundamentals. I like to look at the actual growth of the business. And again, right, let's go back to before it hit the bottom. Beating on revenue, big EPS miss, over 20%. Slight miss on revenue, 38% miss on EPS. Then they beat on EPS, but then they miss on revenue. And then the following quarter, right back to the losses, minus 12%, missing by 12%, not as bad. Then they missed by 7.6%. Okay, we're getting a little bit better. Revenue now chunked up above that 300 million milestone mark. And then what happened? We brought them down here to the low ones, and then boom, it was off to the races. Now all of a sudden the revenue is still increasing, and now the losses are in check, and we're coming in more narrow and beating these expectations. Boom, we did it again by over 40%. Boom, we did it again by 9.5%. Boom, again by 20%. Boom, again by almost 13%. So, you guys know how I feel about it, but of course I'd love to hear your comments. But we can see RSI ran up to slightly above that mid-mark of 50, now pulled back to sub 42. This could potentially curl our MACD and start to maybe cross it, but we have to see. If it does drop to this bottom Bollinger Band here on the daily here of 128, we have to see how the MACD looks at that point to see if we actually end up forming a cross, or if we're just going to bounce and climb back up. 50-day moving average 157. Obviously stock got up to 169 and couldn't hold that moving average. Switch over to the weekly. RSI almost near that bottom benchmark, sitting here at a 33 1/3 right now. If the stock does close at the low of the day, after starting out high, we will potentially form what is called a bear hammer, which could potentially drop us down even further to the lower 130s, potentially even that 1 1/4 mark, right? Even if we stay in this range, if we drop Monday right here, if we drop straight down to the bottom of this range, you can see it's like 124, 125. So again, it is possible, and if they really want to beat it up, they can. But in my opinion, whether they win that lawsuit or not, I think that there's a lot of people out here that'll agree with me that the stock is worth more. And we've already seen it happen. So I guess that's pretty much it. Let's check the pivot points real quick before I let you go. And we can see here on the weekly, we're right near a support level of $1.47, which it recently broke below. So we'll have to see now if we do form the bear hammer and drop to the bottom of the range and then immediately try to spike back up to reclaim that support, or if we'll stay down. Switch over here to the weekly. We can see pivot point here at $1.43. So, you know, we only have like 25 minutes to go. So not sure if we can reclaim that point. But if we do happen to miss, next support level $1.19. So that's why 125, 120, we could potentially still see the stock get beaten up and come back down to those lows. Only time will tell. But overall, in my opinion, I like their growth, and, you know, they can try to say, oh, we were expecting X more subscribers than you posted. Yeah, I can appreciate that, but also at the same time, they are growing nicely. Subs are up, revenues are up, and even average revenue per user is up, right? A lot of these metrics are on the up and up. So I just feel like personally, when it comes to Fubo, I just think, in my opinion, we have many more positives than negatives. And it might be one that you might want to consider keeping an eye on, or potentially trying to get into here on a big dip, you know, and catch that rebound and try to catch some of that long-term growth. But that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for giving me a few minutes. I hope everyone has a good weekend. Take it easy, guys.